Hello. Oh my gosh, you guys, welcome back. Happy freaking, I think today's Wednesday. Thank God it's only Wednesday. I feel like it should be Friday, but I'm happy that it's only Wednesday because I have so much to do this week. But anyway, I want to take you guys with me. We are going on a deep dive all about Bitcoin founders, okay? How did Bitcoin begin? It is so interesting to me that all of these people are putting loads of money into this cryptocurrency and they don't even know who created it. That is so bizarre to me. So, I did a deep dive on Bitcoin, so you don't have to. This is going to be a complete series. So this is just chapter 1. This is just touching the surface. We have not gone that deep yet. Well, we've gone pretty deep, but there's the interesting about cryptocurrency and how it began is that there are so many rabbit holes you can go down and get lost into the space of the interwebs that it's insane. Okay, you guys, we're going to first start with Bitcoin, the white paper, okay? This is the academic paper that explains what is Bitcoin, and Bitcoin is a peer-to-peer electronic cash system, okay? And what that means is, I'm gonna hide myself view there. What it is, it's a purely peer-to-peer version of electronic cash that would allow online payments to be sent directly from one party to another without going through a financial institution. Digital signatures provide part of the solution, but the main benefits are lost if a trusted third party is still required to prevent double spending. So basically, we're trying to limit the transaction fees, okay? We propose a solution to the double spending problem by using a peer-to-peer network. The network timestamps transactions by hashing them into an ongoing chain of hash-based proof of work, forming a record that cannot be changed without redoing the proof of work. I'll explain a little bit of this in a second. The longest chain not only serves as proof of the sequence of events witnessed, but proof that it came from the largest pool of CPU power, okay? As long as the majority of the CPU power is controlled by nodes that are not cooperating to attack the network, they'll generate the longest chain and outpace attackers. So basically, I'll explain that in a second too. The network itself requires minimal structure. Messages are broadcast on a best effort basis, and nodes can leave and rejoin the network at will, accepting the longest proof of work chain as proof of what happened while they were gone. Okay, so let's take, before I dive into that explanation in the abstract, let's take a look at the author. Okay, it says that the author is Satoshi Nakamoto. Now, this is important because this is a pseudonym, meaning it's someone's made up name. It could be one person, it could be a team of people. My theory is that it's a team of developers, okay, more than likely, because this is a huge project. Obviously, it's going to take a group effort here. Take a look at the email for this paper. It says satoshin@gmx.com. Now that's interesting because I realized that I used to have a GMX email account. And basically what that is saying is, hey, we want to separate ourselves from the big dogs. We don't want to be associated with Gmail, AOL, Yahoo. We don't want to be part of that corporate online presence. So we're going to separate ourselves and use GMX, which is really interesting because you think people who created Bitcoin would be so tech savvy that they would have their own email handle after the @ symbol, which is interesting. But anyway, also you can find more about Bitcoin at bitcoin.org. Okay, so let's dive into some of these key points that they mentioned here. Basically, the chain is going to work better with the more users and the more transactions that are on the chain. So basically, think of the game. Oh my gosh, do you guys remember that game Snake? Remember when the snake is moving and it gets shorter or longer? The more transactions that it goes, the better protected and safer it is, okay? And how that works is one of the big problems that I think they're going to run into is that all of the data has to be stored. Now they say that it's going to be like a tree branch that will eventually break off and store the timestamp, and that's all that's necessary. However, there has to be an influx of transactions and users using it so that the chain becomes more secure, and all of that storage is that's kind of like the main problem. I noticed if you notice that storing, whether it be photos, videos, whatever, it has increasingly started to cost consumers money. So iPhone has started to charge their customers for storing things. Instagram says that it's no longer storing all of your data unless you save it or request it. It's trying to get away from storing all that data because that is one of the highly costly things that are associated with online presence. Okay, let's take a look at the timestamps. The timestamps are going to be the biggest key for holding a record of your transaction. So that is the key for knowing that a transaction took place. How I want to look at the blockchain is basically you have a signature, your own stamp per se. You have your own, just like your handwritten signature. You have your own unique handwritten signature. You have the timestamp, and you have, let's say, a math equation. Okay. So you have three things that are security based going into the transaction. And then to complete the transaction, I don't know why this just seems like it makes sense. To complete the transaction, you have another person with their own unique handwritten signature, the timestamp, and the proof of work of how they would solve that math equation. So you're doing like the inverse of that math problem to solve it, and that connects it. That is my basic simpleton explanation. So once both of those parties meet and they lock, that's the new blockchain, okay? So each transaction after. Okay, let's go ahead and look. That is basically just the white paper. Now, one thing that is unique about the white paper that you guys will see at the end of the white paper, which is a big, big clue, is the references, okay? Now, what's unique about this whole system is this has actually been in development since 1995. And that is really important because that was over 25 years ago since this has been started. So also, I took this from the article. This can be found at bitcoin.org/bitcoin.pdf. A block header with no transactions would be about 80 bytes. Now, block headers this is what I'm talking about, where they're going to run into the problem of the data storing. So they're trying to say that with computer systems, typically selling with 2 gigabytes of RAM as of 2008, and Moore's law predicting the current growth of 1.2 gigabytes per year, storage should not be a problem, even if the block headers must be kept in memory. So the block headers are the timestamps. So you have that timestamp from that transaction. You're not necessarily going to have that math problem, the signatures stored, because that's more data it has to store. But on that block header, you're going to have the timestamp. Like, yes, that transaction happened at 8:02 a.m., May 5th, 2021, that transaction. So that's how the history would be stored. But depending on how many users get on, it's going to be interesting to see if there really will be enough storage. Okay, let's go ahead and look at our next slide. Okay, this is the conclusion of the white paper. We have proposed a system for electronic transactions without relying on trust. We started with the usual framework of coins made from digital signatures, which provides strong control of ownership, but is incomplete without a way to prevent double spending. To solve this, we proposed a peer-to-peer network using proof of work to record a public history of transactions. That quickly becomes computationally impractical for an attacker to change if honest nodes control a majority of CPU power. So how I understand this is that it keeps getting smarter with time, and the more transactions, it's going to get more secure and smarter. So even if someone tried to attack it, it's already outpaced it exponentially to where it's going to try to attack things that are too far behind, if that kind of makes sense. The network is robust in its unstructured simplicity. Nodes work all at once with little coordination. They do not need to be identified since messages are not routed to any particular place and only need to be delivered on a best effort basis. Nodes can leave and rejoin the network at will, accepting the proof of work chain as proof of what happened while they were gone. So like, hey guys, I have the key, let me in. They vote with their CPU power, expressing their acceptance of valid blocks by working on extending them and rejecting invalid blocks by refusing to work on them. Any needed rules and incentives can be enforced with this consensus mechanism. So that's more of the, you can tell the security too, where, hey, we know people are going to try to hack in, but we have all these secure blocks that are going to stop them and outpace them. Okay, I'm going to pause the recording. Okay, let's kick off where I was. Let's move to slide 5 now. Okay, this is another article that I pasted in here because I didn't want to forget it, but this is from the nakamotoinstitute.org. And this is another academic journal article that says secure names for bit strings. So bit strings are interesting because my understanding, what I've read so far, is that blockchain is like the stronger bit string. Okay, so more on that later. I just put this in here, I think, because I didn't want to forget about this article. Okay, you guys, this is one person who could have started Bitcoin. Now, I do not think that this person did start Bitcoin, but Gavin Anderson is a software developer and he is known for his involvement with Bitcoin. So he was originally a developer of 3D graphics and virtual reality software, and he became involved in products for Bitcoin market in 2010. So a little bit later, which makes me think that maybe he is not Satoshi Nakamoto, but he might be. Okay. He was declared by Satoshi Nakamoto as the lead developer of the reference implementation for Bitcoin client software after Nakamoto had announced his departure. This can be found on wikipedia.org. So this is one person that has had a prominent presence in the Bitcoin sphere, and they have founded the Bitcoin Foundation to support and nurture the development of the Bitcoin currency. And by 2014, he left his software development role to concentrate on his work with the foundation. So even though he is not maybe Satoshi Nakamoto, he is an integral part for getting Bitcoin off the ground. Okay, this guy, I didn't really want to include him in here, but he kind of has done, I think, a publicity stunt. I'm not sure. Dr. Craig Wright, he kind of says, yes, I'm Satoshi. I did it. This is me. I'm Satoshi Nakamoto. I'm a genius who did Bitcoin, but this has kind of been disproven. So I'm just going to quickly go to the next one. Okay, so that was more of a publicity stunt. This guy, I think, was more of a publicity stunt because he wanted to get exposure. So this one, just take with a grain of salt. Okay, let's go ahead and move on to why he is probably not Satoshi, is because it says here from this article from CoinDesk that Craig Stephen Wright is a liar and a fraud. He doesn't have the keys used to sign this message. So remember when I was talking earlier about how we each have our unique personal handwritten signature? That's kind of like his key, right? He doesn't have that key. So there's no way he could be Satoshi because he doesn't even have the keys to get into those early transactions of Bitcoin. So the Lightning Network is a significant achievement. However, we need to continue to work on improving on-chain capacity. Unfortunately, the solution is not to just change a constant in the code or to allow powerful participants to force out others. We are all Satoshi. Okay, this little excerpt, we are all Satoshi, this brings us back to my next couple slides. I'm going to go into more of that whole school of thought, okay? Also on the top, I just want to mention, it says, after a list of Bitcoin addresses Wright had provided as being his holdings in an ongoing court case were briefly and inadvertently made public by plaintiffs on May 21st, 145 of the addresses were used to sign a public message, both calling Wright a fraud and making it plain that he does not in fact own or control them. So it was kind of like the Bitcoin sphere wrote out the word fraud to say like, no, he's not Satoshi. This is kind of a gimmick. I think it's kind of a publicity stunt exposure thing. Okay, you guys. So anyway, moving on from that guy. This is Ethereum's founder, okay? Vitalik Buterin. I know I'm probably saying that wrong. Please correct me in the comments. I know that he is now considered a billionaire as of last week or so. This is May 5th, 2021. So in May 2019, Wright started using UK libel law to sue people who denied that he was the inventor of Bitcoin and who called him a fraud. Wright also served legal notices to Vitalik Buterin, the founder of the cryptocurrency Ethereum, who called Wright a fraud. Roger Ver, an early Bitcoin entrepreneur and advocate, and Peter McCormick, a podcaster. So they're kind of like frivolous litigation is what I'm thinking. Just kind of like he's still trying to prove that he is, but it's already been disproven, okay? And this is not the right guy. This is the right guy. So he sued him. He was trying to sue him for libel. Because basically he's saying, hey, no one can sue me that I'm the wrong guy, because whoever sues him for being not Satoshi is obviously going to reveal who the real Satoshi is. So it's kind of just a silly gimmick thing. Okay, here is another player in the Bitcoin space. This is Kaminsky. He was an outspoken privacy rights advocate. And during the FBI Apple encryption dispute, he criticized comments by then FBI Director James Comey saying that, what is the policy of the United States right now? Is it to make things more secure or to make them less secure? In a 2016 interview, Kaminsky said, the internet was never designed to be secure. The internet was designed to move pictures of cats. We didn't think you'd be moving trillions of dollars onto this. What are we going to do? And here's the answer. Some of us got to go out and fix it. So this is part of the whole movement, okay? This is a movement towards transparency, your own individual choice for things. This is futurism, okay? So this is a whole school of thought that I'm going to be doing more videos in later, but this is just chapter 1, focusing on who could be, you know, the founder of Bitcoin. Okay, so his whole thing that made him big was that there was a flaw in DNS. And what DNS? It's the domain name system. So if any of you guys own any domains, you guys know there's like a system you can go into your domain and you can web host for each thing. That's the whole DNS, is how you like edit who is hosting your site, etc., your name, whatever. If you have like, if you bought a URL from GoDaddy, Google, wherever you buy your URL. Okay, so there's a fundamental flaw, and basically it was that attackers could easily perform cache poisoning attacks on most name servers. So basically the history is stored and the attackers can get the data that's on that cache before it's cleared. So with most internet-based applications depending on DNS to locate their peers, a wide range of attacks became feasible, including website impersonation, email interception, and authentication bypass via the forgot my password feature on many popular websites. So you guys remember this, if you have junk email and it's like, oh, sign into your credit card account, and it has like a fake looking like Amex website where it like looks kind of like the Amex website, but if you look really closely, the logger interface might be different. It might have a couple tweaks, basically giving you opportunity to put all your secure information, and then the hackers can take that information and steal your money, basically. So that is how they were kind of copying those websites too. That's just one example. I mean, there's thousands of examples of how they attacked. Okay, so basically he he said everything in the digital universe was going to have to get patched. Okay, so basically, he was helping keep the security of the internet. And this is important because blockchain is supposed to be one of the most secure, and it will be the most secure blockchain transactional database after we have users and transactions on the blockchain. So people think that because he was so good at preventing attackers and hackers, that he might have had an integral part in forming this blockchain, okay? Okay, we are going to go to the next slide. Okay, this is Hal Finney, and he was also an early Bitcoin contributor, and he received the first Bitcoin transaction from Bitcoin's creator, Satoshi Nakamoto, okay? Now, I do want to point out that some of these people that I am mentioning, they have already, they have already died, and they're no longer here. So we don't know, they can't say one day if they were the original Satoshi or not, okay? Okay, you guys, so it seems so obvious to me. Here we are faced with the problems of loss of privacy, creeping computerization, massive databases, more centralization, and David Choum offers a completely different direction to go in, one which puts power into the hands of individuals rather than governments and corporations. The computer can be used as a tool to liberate and protect people rather than to control them. So again, this is the whole school of thought, taking your power back and deciding on that peer-to-peer network, hey, take out the middleman, okay? So Finney died in Phoenix, Arizona on August 28th, 2014 as a result of complications of ALS and was cryopreserved by the Alcor Life Extension Foundation. So cryo, I can't say that, wait. Okay, a quick note about being cryopreserved. It's a tongue twister. Cryopreserved is when all of your organs and your body are, for simple terms, frozen, and then eventually with the hopes that you'll be thawed out and be able to come back to life again. This is important because this is another component of that school of thought, okay? These are futurists. They are planning for the future. So cryotherapy, preservation, all of those things are going to be a part of the future in these scientists' eyes, okay? So also one thing that I found unique about a lot of these computer scientists is they all are interested in cryopreservation, okay? So let's go ahead and take a look at quickly what the Alcor Life Extension Foundation is. This is most often referred to as Alcor, and it is an American nonprofit organization based in Scottsdale, Arizona, United States. Alcor advocates for, researches, and performs cryonics, the freezing of human corpses and brains in liquid nitrogen after legal death, with hopes of resurrecting and restoring them to full health. In the event that some new technology can be developed in the future, cryonics is regarded with skepticism within the mainstream scientific community and has been characterized as quackery and pseudoscience. However, there's still a big following. And notice that it says that you can only do it after legal death. So it's illegal to preserve someone before they're actually declared dead. So now that is interesting because usually if someone dies, there's usually an ailment, something, maybe one of their organs failed. So that would not make them the ideal cryopreservation corpse because you would want to be able to thaw and have everything working. So I just find that interesting because that's another rabbit hole we can go down. Okay, let's talk about Satoshi Nakamoto. This goes back to that same quote. Let's take a look at that quote one more time. It says, oh, back over here. This quote said, we are all Satoshi, okay? Now, I have spent a lot of time in the Bay Area, and a lot of the techies there, they always talk about artificial intelligence and human intelligence, and that they cannot exist without one another. And basically, artificial plus human intelligence has to be symbiotic. They have to work together for advancement, for evolution, okay? Okay, you guys, I'm back. So let's quickly talk about the whole idea of the artificial intelligence working with the human intelligence. If you find the meaning for Satoshi, that means intelligent history, okay? It came from Japanese. It is intelligent history. That's what Satoshi means. And Nakamoto means it's the Japanese central origin, or one who lives in the middle. Found mostly in the Ryukyu Islands, okay, you guys? So when you put these together, people are saying that it means central intelligence, right? And central intelligence to me is what I put together is the artificial intelligence plus human intelligence is going to create the central intelligence, okay? And that is the whole cryptocurrency blockchain craziness. Okay, you guys, so also I added this in here. I'm not sure why, but it is a bit. Oh, okay, a bit is a binary digit, the smallest increment of data on a computer. A bit can hold only one of two values, 0 or 1, corresponding to the electrical values of off or on respectively, okay? Okay, let's see what else I have on here. Okay, I want to go into this more. I'm going to go into this more, but I'm going to pause the video here because I think it's a little long. This is chapter 1. I'm going to break these up. Please let me know. What are your guys' thoughts? Have you researched Bitcoin on your own? Have you researched Bitcoin's founders? What have you found? Do you know the computer scientist who created Bitcoin? Let me know in the comments. What do you guys think about all of the different theories that are out there on the internet about who created Bitcoin? And how do you think this platform has grown to be such a trusting platform that millions of people are willing to put their hard-earned USD into something that they don't even know who created it? Is this the new internet wave? Let me know in the comments. Are we trusting AI more than ourselves? Let me know. Discuss in the comments. Bye, you guys.